Well, I think the stock market's on it's on a combination of fiscal and monetary pulse that we've never seen before in history. Nothing like this. And of course, that's why you've got more companies with a PE over 100 than at any point, any other time in history. I think we're something like 50% more than we had in the top of the 2000 NASDAQ bubble. But there's, again, if you just compare and contrast, in 2000, we had real rates of about 250 basis points. We had nominal rates near 6%. And yet you still were able to achieve these lofty valuations for a variety of companies. Fast forward to where we are now, you've got real rates that are negative 200 basis points, nominal rates at 0. And again, you can see why you've got Tesla at 900 times earnings, because of the fact there's really no real good alternative for your cash. And so what we're seeing is what you see normally in many post-election years, a redeployment of cash back into risky assets after the fears that are associated with presidential elections and change in parties and the uncertainty, and then knowing after they go away, irrespective a lot of times of even what the fundamentals are, risk capital comes back in the markets, and that's kind of what we're seeing now. And I assume that trend's going to continue.
Well, I'm hearing you on that and the surge that we've seen in risk assets. Certainly, I know you more as a macro trader, not necessarily an investor. You look at things from a trader's perspective. Are there any events on your radar, anything that could really change things or drive things in 2021?
Well, there's some things that I think are immutable, and then there's some things that are going to be very binary. It's funny, I'm actually speaking from Georgia right now. So I know this in Georgia. I think anyone that thinks that this election is forecastable is just wrong. So I think the Senate is a 50-50 toss-up. You've got 5 million voters, I believe, in Georgia that voted. That number is going to probably drop to 3 million. Or it should drop significantly from the general election. That's what runoffs typically do. It's going to be about who mobilizes their base. And you got this brand new phenomena of mail-in voting, which clearly favors the Democratic Party. It takes, 10 minutes to go ahead and fill out a ballot and mail it in, whereas most Republicans go to the polls, and what's that, 2 hours? So even though I think you would look at the numbers, you would think the Republicans have an advantage in this, there's just a lot of unknown events around this runoff. And so I think it's a coin toss. And yes, the outcome of that will have a lot of binary consequences, because we're back to it's going to be all or nothing. You're either going to have 2 blue senators, you're going to have 2 red senators, and they'll have significant consequences for some assets. So yes, that part I think is indeterminate. But then I think there are other things that aren't indeterminate. And that's, we're going to have a vaccine. The vaccine's going to bring us back. We're going to have an incredible growth rebound. I have 4 kids in their 20s, and it's like a horse at the beginning of a race. They're so ready to get to see their friends, to get to restaurants, to vacate. They're just ready to get out and go crazy, like I think everyone else in the world. And yeah, I assume you're going to have a second quarter explosion. Certainly at the retail level, at every level, and you're going to have this just massive boom. And the consequences that I think are pretty clear for fixed income. Fixed income will probably go down during that. Commodities will probably go up. And I think those are the 2 things that seem to me to be not influenced by what happens here in Georgia in January. Maybe there'll be an accelerant if you had a blue wave as opposed to a red wave. But I think where we pretty much charted the course to some type of absolute supersonic boom come second and third of Q2 and Q3 next year.
Irrespective of how Georgia goes, it sounds like.
Yeah, I mean, I think again, if the Democrats won, they're gonna try another infrastructure bill. So you'd probably accelerate that growth path a bit. If they don't win, I think the vaccine by itself will again unleash so much pent-up demand that you're going to really see a lot of growth in the second, third quarters, and you're going to see commodity prices probably rally, see inflation come back. There'll be a whole suite of things that I think are pretty much baked in the cake.
Can we talk about inflation for a sec? I know you wrote this letter back in May, and I will preface it. I know you're not a flag bearer for Bitcoin by any means, but you did have a fascinating thesis. Would love to kind of get an update on that, especially at current levels, and how you're thinking about the cryptocurrency in the context of your portfolio.
Again, I'm not an expert on Bitcoin by any stretch. It's just with a market cap of 500 billion, it's the wrong market cap in a world where you've got $90 trillion worth of equity market cap, and God knows how many trillions of fiat currency, et cetera. So it's the wrong market cap, for instance, relative to gold, which is 8 or 9 trillion. The Bitcoin reminds me so much of the internet stocks of 1999, because the internet was in its infancy. No one knew how to value it because of the world of possibility that lay ahead. What you can be certain of is that probably 20 years from now, our kids and grandkids, whatever, all of us will be using some type of digital currency. Digital currency will be used by every sovereign. They may have their own digital currency, whatever. They'll be very, very, very commonplace at that point in time. Cash may be gone. And so in that world, where does Bitcoin fit in? As well as some of the other cryptocurrencies? Where does Ethereum or Tether? I don't know. I'm not smart enough to figure that out. I think that Bitcoin, if I really had to kind of guess what the future is going to be, it's going to be a lot like the metals complex, where you have precious crypto. That might be Bitcoin. It's the first crypto, first mover in a world that's so compressed. It has that historical integrity within digital currencies that it will always have. So that might, and again, because of its finite supply, that might be the precious crypto. Then you're going to have transactional cryptocurrencies along with the sovereigns, and they may be more like the industrial metals. So where you have gold as a precious metal, and then you've got copper and platinum and palladium, et cetera, that are industrial, lead, aluminum, industrial metals. You may have precious crypto and you may have industrial crypto. So what I do know is that it's no way possible today to know what the next 10 or 20 years are going to be like. And I know that if I had to again take a position on it, I'm gonna take the brand name, which is Bitcoin. I'm going to assume that it's the wrong price for the possibilities that it has, and I'm going to assume that the path forward from here is north. And again, we had no idea in '99 of how the internet was going to sort out. And there were some companies that obviously, if you owned in '99, despite the crash that came after that, did just incredibly well and ended up becoming dominant players in the world. That's what's going to, my guess is that's what we're going to sort through